contemporary issues in finance. Remember, contemporary means what here? Modern issues. Issues that are coming. We also call them what here? Emerging issues. Emerging issues. And today I'll be looking at two emerging issues. We have what we call crowdfunding. Crowdfunding, I type here, it's straight away on that. So we have what we call crowdfunding. This is really a big thing at the moment. Yeah, very big. Your syllabus calls it CLOUD, cloud, but it's supposed to be crowdfunding. And then number two, I'll be looking at what we call Islamic finance. Islamic finance, Islamic banking are taking over. They started just the other day, and most of them are boasting of a very big clientele. And if you look at our traditional banks like KCB, they have a Muslim section, So it's taking over, and we want to know, what first of all is this Islamic finance and how does it operate? How does it operate? How does it operate? How does it operate? So, great. So I share my handout right away. So I would want us straight away to start with what we call Islamic finance as an emerging issue. Islamic finance. So it is on your handout. You don't have to open your handout right now because I'm sharing my screen. Now, of course, you know Islam. Islam is a type of faith. We know that the Islam followers, in this case here, profess. They follow Allah. Allah, of course, most importantly for us, it's about knowing the loans here, the loans that they provide, how do they work? So Islamic finance is a financial system that is based on the principles of Islamic law, what we call Sharia, and guided by Islamic economics. It aims to ensure that financial transactions are in compliance with Islamic values and ethics such as fairness, social justice, and equality. Ladies and gentlemen, Islam sio religion ya kugandamiza. I'm not a Muslim, I'm a Christian, but at times in this case here, some of the things that we do as Christians zinagandamiza wengine. Hiyo kitu kama ya usury, where you're using other people too much. You give somebody a loan of 10,000, and then you ask these guys to be paying you interest of, say, 20%, 2,000 every month. So this guy within a year has been able to pay you back your principal. And of course, there is something there on top, but it's crazy. I've seen people paying interest of the principal amount borrowed. That usury, you're using other people. It's not it's interest. It's all investment are shared between the lender and the borrowers. The lender and the borrowers. All right. So I would want to confirm whether we are together with everybody. Are we together? There is a time I lost internet again. Are we together? Are we together? Because I would want clear now, okay? I would want now in this case here to raise my gear up. Thank you very much. So we continue. Thank you very much. All right. So what have we said? That in Islamic finance, it's about fairness. I'm giving you a loan, fine, but in this case here must be fair to you. All right. So I repeat, Islamic finance prohibits the charging and paying of interest riba, which is considered usury. Using other people is not allowed in Islam and is considered unacceptable under Islamic law. Instead, Islamic finance operates on the principles of sharing profits, sharing losses, where the risk and reward of an investment are shared between the lender and the borrower. This can take the form of equity financing, such as partnerships and joint ventures, or asset-based financing, such as leasing and commodity murabaha. You should be able to understand what this is. The main principles of Islamic finance are that wealth must be generated from legitimate trade and asset-based investment. Wealth can only be generated from legitimate trade. And of course, by you, for example, selling assets, etc., asset-based investment. The use of money for the purpose of making money is expressly forbidden. You can't tell me that you are selling money, that I'm giving you 1,000 shillings, and then you return this 1,000 with 200 on top. You return 1,200. So it's like I'm selling money. All right. You're using other people. So somebody should go with their 1,000 you gave them. They toil all the day, moving up and down in these marketplaces. They make profit. And then which profit will they make to be able to finance 20%? Investment should also have a social and ethical benefit to wider society beyond pure return. That's why whenever you go to these Islamic banks, whenever they're giving out especially serious monies, they'll always ask for a social and environmental impact assessment report. That this project are going to do, how will it benefit the surrounding community? If that is not taken care of, then chances are these people will reject giving you the money. Because in this case, ladies and gentlemen, there must be some social benefit arising out of this. But risk should be shared by many people. And Islamic finance, risk shall never be taken up by just one person. All harmful activities, what they call haram, should be avoided. Islamic finance is guided by Sharia law, which prohibits certain activities and transactions that are considered unethical or harmful. Some of the activities that are prohibited in Islamic finance include riba, interest. Islamic finance prohibits the charging or payment of interest, which is seen as exploitative and unfair. Instead, Islamic finance promotes the principle of PLS. We shall be calling this PLS, profit and loss sharing. Then we have gharar. Ladies and gentlemen, if you get a Muslim who, for example, in this case here, is selling an asset that is not in his possession, I mean, that will not be. In most cases, Muslims, they don't work with this agency. So even if, for example, I appoint you as an agent, go and sell this land of mine on my behalf. Before, in this case here, this person makes very serious arrangements with you, he'll have to take you back to the owner. All right. They would want to sell something that they are really sure of. All right. This is called gharar, uncertainty. Islamic finance prohibits transactions that involve excessive uncertainty or risk, such as speculative investments or the sale of items that are not in the buyer's possession, The same case with Maisir. If you get in this case an Islam who is gambling, that's not an Islam. Islamic finance prohibits transactions that involve gambling or games of chance, as these are seen as anything speculative. A real Muslim, a genuine Muslim, will never enter into those kind of activities. Then we have here the haram activities. Islamic finance prohibits investment in businesses that engage in activities that are considered haram, prohibited under Sharia law, such as the production and the sale of alcohol, tobacco, and the pork products. Those are haram. Excessive debt. Islamic finance prohibits the use of excessive debt or leverage, as this is seen as unethical and potentially harmful. I've been a victim here. There is a time really that I was in huge debt, and I went to First Community Bank, which I'm told currently has got financial issues. All right. So that is the time when my loans were taking away like 70, 65% of my income. And then that boss told me that, you know what, we can't give you more, because Islamic finance believes that they should be able to leave you, the borrower, with about 50% of 50% of your, they don't work with a third rule. They work with 50%, because Islam does not work with excessive debt. They can't give you beyond what you cannot manage. Yeah, they like working with moderate debt. They moderate the debt quite a lot, 50%. So excessive debt is not allowed. It's not allowed in Islamic finance. Investments in unethical or socially harmful businesses. Islamic finance prohibits investments in businesses that are considered unethical or harmful to society, such as arms manufacturing. These will harm the society, yeah? Or companies that violate environmental regulations. Islam would not want to be part and parcel of that. All right. Yeah, I can see some chart here. Let me read the chart. Let me read the chart. Mwalimu, how do they get profit if they prohibit riba? I'll be getting to this just in a moment. All right. But just in a nutshell, remember they enter into what we call PLS, profit loss sharing. Should you make a profit, then you come and sit down with them. Tell them that you guys gave me like 1 million shillings. I've been able to make 200,000 as profit out of the venture that I went into. So out of these 200,000, what do? We share. We share. And there are times in this case, you will make a loss and tell them the truth. The good thing with the Muslim, the genuine Muslim, no, of course, it can't be like all of them are genuine, but majority of them are really, really genuine. All right. They'll come and tell you, hey, you gave me 1 million, but we made a loss. So Islam in this case here allows you to do what here? To share that loss because it is PLS. It's profit loss sharing. But you shall be able to see that just in a moment. All right. So types of Islamic-based sources of finance, we have the famous mudaraba. Some literature calls this muduraba. Yeah, mudaraba is quite a very interesting model that I've always found most members of this Islam deal with. Under mudaraba, we have this rich man called rich man A. So rich man A comes together with what here? Poor man. Don't call somebody poor, but okay. So call this other guy B, but A is rich, B is not very rich. He doesn't have capital. So A is the capital provider, B in this case here will be the one running the business. So A provides capital, 1 million Kenya shillings, and then he goes. You will never see him in the day-to-day running of the business. B, the one who never had capital, the one who has received money from A, is the one who will be running this business day in, day out. So they do business, they make profits. When they make profits, what happens? They share. A and B will be able to share in some pre-agreed proportions. In most cases, they share 50-50, 50-50%. You gave me 1 million, I've gotten 200,000. So in this case here, A takes out of this profit 100,000, B takes 100,000. Can somebody in this case here guess and tell us, what if B comes and says, I made a loss of 200,000? What do you think will happen? If B comes and says, hey, I made a loss of 200,000, what do you think will happen under mudaraba? What do you think will happen? Somebody talk to me. Mudaraba, under mudaraba, what do you think will happen? Somebody talk to me. They will share? No. Ladies and gentlemen, kumbe nyinyi hamjajua Islam. Na mimi si preach Islam. No, but Islam si dini ya kufinyilia maskini. If it's profits, you share both. If it is losses, it is only the Rabul Mal. We call him Rabul Mal, the rich man. The rich man is the one who will be able to take the entire shock because he has some shock absorbers. You're rich. So in this case, the rich man takes the entire loss. Are we in agreement? Are we understanding this, ladies and gentlemen? Under mudaraba, the Rabul Mal gives in this case here the entire capital. Should they make a profit, they share. But should they make losses, then it is only the rich man who will be able to take the entire the entire loss, because where will the poor man get his portion of loss? If you tell this poor man to make up for his loss, where will he get this loss from? You want to sink. Already somebody in this case here who is down, even down further. Islam does not allow that. Islam does not allow that. Islam does not allow what we call usury. usury, using other people in a bad way. No, no. So an mdaraba, it's a type of partnership between two parties where one party provides the capital, rabul mal, and the other party provides expertise and effort, the mudarib, to manage the venture. In a mudaraba arrangement, the profits generated by the venture are shared between two parties in a pre-agreed ratio, where the losses are borne solely by the capital provider. The mudarib is not liable for any losses except in cases of negligence, mismanagement, or dishonesty, which again Islam is against. You keep your books. At the end of the year, come and tell us, hey, I made losses. But I mean, you've been quite open to everybody. So then there is nobody who will tell you, hey, you share some burden of the loss. It's called mudarib. Mudarib. It's called mudarib. Then we have musharaka. You know, Islam and the Kiswahili, I think because of Arab, very, very close. You see, like musharaka ni kushirikiana, partnership, a form of joint venture where the investor and the entrepreneur share both capital and the management of a project. So under musharaka, A and B, they will bring capital, both of them. A and B, they bring capital, both of them. A and B, they run the business, both of them. Musharaka, wanashirikiana kila kitu, wanaleta capital na pia wanaran biashara pamoja. So then can somebody guess in terms of profits? Of course, profits, I don't want you to guess. So profits, of course, they will share equally. What do you mean in this case here? If, for example, what do you understand? If, for example, a loss was to come up, what do you think will happen under musharaka? Kiana wote. So that's the suffer both of them. They share the losses equally. I'm so happy because you guys are really, I'm getting a signal that my internet is unstable. Are you guys able to hear me well? I'm getting a signal that my internet is unstable. How is it now? Okay, great. Then I'm back. So we continue. Clear. Thank you very much. Thank you very much. So an msharaka, a form of joint venture where the investor and the entrepreneur share both the capital and the management of a project. And the profit and the losses are shared. So what and what is shared? Profits and what? Losses. Then we have what we call sukuk bonds. Sukuk bonds, this is very, very popular in your exams. Financial management, intermediate level, advanced financial management. You'll be able to see many questions on sukuk bonds. Is there anybody who has ever heard of Euro bonds? Oh, yeah. Anybody who has ever heard of a Euro bond? Euro bond? Yeah, somebody has heard of Euro bond. Let me write here. No, at times matamshi, Euro bond. So Euro bonds, from the word Euro, of course, it doesn't really mean European, but basically Euro bonds means what? Yeah, that the Kenya government is using this Euro bonds vehicle to go to outside nations to borrow. So in this case here, these are what? Yeah, long-term notes. Yeah, government walikula. Asante Bernard. Asante Bernard. Actually, now this one forms even my basis of this particular water discussion. Yeah, Eurobond. Term notes. So the long-term notes, we use long-term notes here to, or bonds to borrow. But when they are Euro, then you're giving those bonds like a note, giving those bonds to people who are in Britain, Germany, US, and then they give you what? Yeah, they give you loans which are denominated in foreign currency. Foreign currency. Let me ask you a question, and please bear with me because today I'm going to ask you so many questions because I can see you guys are really doing a good job. Borrowing through Eurobonds, using Eurobonds. Does it have any advantages? What are the major advantages of borrowing using Europe? Because I know you are writing so many that when you use currency, you're going to bring home the dollar, the British pound. When you bring home here the hard currency, then that will help in stabilizing our exchange rate. Yeah, thank you very much. Exchange rate stabilizes the currency. Source of foreign currency, thank you so much. Thank you so much. One thing you are forgetting is that they are cheaper. Most of them, the interest rates will be between 4% to 6%. They are cheaper than what here local loans. Ladies and gentlemen, please listen to me. I'm so sure there is nobody who is thinking about this point. That when the government thinks of borrowing out there, then they shall be able to leave our local banks to lend to our SMEs. It is very, very bad for any government to start borrowing internally. And this is the mistake that so many presidents are making. Every other president who comes over here, they would want to borrow locally. Do like what 𝐁𝐥𝐸𝐷 did. 𝐁𝐁𝐥𝐸𝐷 said, no, let, in this case here, these banks give money to SMEs. And it is during 𝐁𝐁𝐸𝐷's time when I saw not one, not two, not three bank managers walking to our colleges here. Bank managers walking to our colleges here, hawking loans. If that happens, an economy expands. But when you start giving banks an opportunity to give money to the government at, say, a high interest rate of 18%, then the banks will never look the way of what here SMEs. SMEs will have trouble. I remember one time during these times when we had crazy interest rates, like 18% for government bonds and the treasury bills. We would walk in this case here to a bank with some of my partners, and then of course a bank refuses to give you what here, refuses to give you money. So when they refuse to give you money, later on, of course, you have to follow. I mean, what happened? The other years, you guys used to give me money. How comes this time around you never gave me money? Then they'll give you reasons. For example, they'll tell you that your partner, your spouse, is listed in CRB. But it's not my spouse who's borrowing. It's my company. All right? They'll come with excuses that you guys came like four of you, and from the look of things, one of you was drunk. This guy will not be able to pay what? I mean, those things tell us the truth that these banks now, we are safer giving what your government money. So whenever you hear of a bank or rather a government borrowing outside there, it's really, really good. Like now I'm so happy because I can see our government now has decided to lower the interest rates. Yeah, I was reading today. Yeah, it has really come very, very down. It's very bad for some of us who wanted to buy government bonds today, or rather like in the coming weeks or coming months. Very, very bad. But now for the local SMEs, when we hear that the government has dropped their government bond rates, their treasury bill rates to 10%, that is very, very good for what here for businesses. Now we start seeing businesses expanding. Businesses start doing what here, expanding, which will be very, 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 very good. Very, very good. All right. Now, there is one big disadvantage of these Euro bonds. You know, Sukuk bonds, Islam, these guys are straightforward people. They are great people. All right. Whenever they give you money, they follow up. They would want to know, how are you going to use my money? Because they will not want to give you their money without knowing how you're going to use it. And then you end up using it in a business that is selling pork. Automatically, the giver of the money will go to hell. They always believe in what we call asset-based, asset-backed loans. Henry Rotich, if you remember Henry Rotich, before things went south for him, he was working on borrowing using the Sukuk bonds. But do you think our leaders would want to borrow money from somebody who would want to come and inspect how the money is being used? Because Islam, they must see. When an Islam gives you money and you tell them that, hey, I'm going to construct this particular house, they would even want to know, my money will construct which floor of the house, floor number 3, floor number 5. They would want to know, they would want to follow. All right. So of course your guess is as good as mine. That is why 20 years down the line, would be like 10 years, not 20. 10 years down the line, we have never been able to break even on matters of sukuk bonds, because sukuk bonds, unlike euro bonds, euro bonds, you're just given, these guys give you money, go and use it the way you would want. And that is why at times when I look at our old man, Raila Odinga, that man tried to assist us. We refused. Let that man, in this case, he also joined government, and then they do what? He also eats something. I mean, he has a few years left. Because he came and told us, ladies and gentlemen, 200 billion Kenya shillings euro bond being given like this. If that money came to Kenya, we would have, in this case, even smelled. Everybody would have, that money never came. Most of it was stolen. That is the truth of the matter. If it is sukuk bonds, because of the specific, these guys would want to follow you, then this money can't be stolen, can't be stolen totally. Can't be stolen totally. Ladies and gentlemen, please come here. We read about these sukuk bonds. Sukuk are Islamic bonds that are structured in a way that complies Islamic law. Instead of paying interest, Sukuk pays returns based on the performance of underlying assets such as real estate, infrastructure, or other tangible assets. So if it was Sukuk bond, for example, used to construct the Nairobi Expressway, then they would have done it. And then whatever now is being paid as toll fees, yeah, that profit you share. If you make losses, again, you share. Sukuk bonds, great things. Yeah. Then we have Ijara. Ijara is leasing. Muslim, they are big in terms of what they are leasing. You get like this Rabulmal, they put up a very big building and then they lease more portions, in this case here to the hustlers here to help themselves. Ijara is a form of leasing where the lessor investor buys an asset and leases it to the lessee for a pre-agreed rent. I don't have to really talk about this so much. I don't have to belabor. Then we have Murabaha. Murabaha, from the Kiswahili word murabaha, nakupa moja, nakupa murabaha, nakusaidia. All right. So I'll give you my goods. You go and sell. And once you sell, now you give me the cost plus, in this case, some amount, which will take care of the financing aspect. Muraba is a form of cost plus financing where the financier purchases an asset and sells it to the customer at a markup, which includes the cost of the asset and a pre-agreed profit margin. I don't like this definition quite a lot. Muraba is very, very common, ladies and gentlemen. When you go to Isli, people have ever done this business with these members of Islam. Yeah, they can easily give you their goods. You go and sell. Go and sell. And then once you sell, then you have this particular cost and a small margin there, which again is debatable. What if I go and sell this at a loss? They will be able to sit down with you and agree you made a loss, and what do we do and what is the way forward? So it'll be very important for all of us to keep these things in mind. Then we have common questions on Islamic finance. I would want you to go and read this. We have, in this case, what Islamic finance and how, explain the concept of riba. Riba, always mention it is usury, using other people. It is prohibited. It is haram. Discuss the various Islamic finance products and services offered by, already have done this, Murabaha, Ijara, Musharaka. We have Mudaraba. We have Sukuk. Takaful is about Islamic insurance. Islamic insurance, yeah. We have the normal Islamic banking where deposits and, borrowings must comply with this Sharia law. Please ensure that you are answering those questions in a very good way. Principles of Islamic finance. Remember to tell us that riba is what here is haram. Is haram. Remember, whenever you talk about profit, principles of Islamic finance, when a bank gives, it is PLS. You keep on talking about these things. Asset backed. You have to give us a loan backed on what asset are you going to put up with this money. We can't give you money if you are Muslims. Can't just give you money anyhow. The way somebody will call Mwalimu Aura, give me something, I give you 10,000, and then you go and invest this money in bad things, I go to hell. No. Muslim would want to know, what are you going to use this money for? So these are things I would want you to go and read. So I have a very few minutes, ladies and gentlemen, which I would want to use to talk about crowdfunding. Crowdfunding, very, very popular in your exams. I can see charts. Yeah, I've already shared Liz. I've shared Liz, but I can share again. I can share again, Liz, here. I can share again. Yeah, I normally share these notes, and later on you get students keeping on asking, where are these notes? Where are these notes? When they ask like that, what do? You, as my great friend students, please share those notes with them. Because now I'm in more than 700 WhatsApp groups. At times it becomes very hard to follow. It becomes very hard to follow. But fortunately, I've been able to acquire what we call Zoho CRM. I believe it will be able to assist me track my conversations where people are tagging me, etc. We have what we call Zoho Social, very, very good customer relationship management tool. But now you have it. And ensure that you keep on. You need like a class rep who can be sharing. Yeah, kindly, somebody should share this on WhatsApp group. So James, I've shared here in the chats. Let me share again, James. I've shared here in the chats. There is something on the chats there where you have just asked that question. There is something there in these chats. You'll see from Mwalimu to everybody. Yeah, I've seen somebody asking there about the current interest rates. Most banks are charging 24%, but there are others which are really, really high. Yeah, especially when you are listed with CRB, your borrowing rate increases. That is why I normally tell my students, don't joke with your CRB status. Don't just take things lightly, that you borrow from the hustler fund 500, then you refuse to pay. You're a fool, because you're going to be listed. And once you're listed at CRB, it will take you 7 years for your name to be cleared. Yeah, you go in both. Just look at your syllabus. It is in both AFM and FM. It's in both. So this crowd, from the word crowd, are quite big. So you're going to use a big population. Yeah, you get money from a big population through some online platforms. Crowdfunding, very, very popular. So crowdfunding, ladies and gentlemen, I'm reading here. Crowdfunding is the practice of raising money from a large number of people, typically through the internet, to support a specific project, business, or cause. It allows individuals or organizations to collect relatively small contributions from a large group of people rather than relying on a few large investors or donors. Ladies and gentlemen, people are doing crowdfunding often in Kenya. Like you've seen Omondi, this actor. Yeah, this Omondi guy, you must have seen this Omondi. I mean, raising funds to the extent that he's able to build a bridge in Kisii. Raising funds to an extent that he's able to take a child to India. And how much do you think the contributor sent to him? It is 10 shillings, 20 shillings. We have Murara Kebaso, this guy people call conman. I don't know whether he's a conman. I don't know. I don't want to talk about politics a lot. But he's getting serious monies. He's even able to buy, great vehicles. He has a very big office somewhere. And all of it is being funded by what? By the public. So whenever you are borrowing small amounts from many people, we call that one what here? Crowdfunding. Is there anybody who has ever used any crowdfunding platform for their businesses or for their sick relatives? Crowdfunding. Very important. Very, very important. Very, very important. Yeah. Yeah, so the key word is that crowdfunding is the practice of raising money from a large number of people, typically through the internet, to support a specific project, business, or cause. It allows individuals or organizations to collect relatively small contributions from a large group of people, rather than relying on a few large investors. This thing of saying that my uncle is rich, that my uncle will do this and this when I become sick, trust you me, may not work in the contemporary world. This method of financing has grown significantly with the rise of digital platforms, providing a way to creative entrepreneurial and charitable initiatives to gain funding from a community. Types of crowdfunding. We have donation-based funding, like what Eric Omondi is doing. That's donation-based funding. We simply send something to him as a donation. We don't expect any return. We don't even expect him to return back our money, because if we expect him to return back our money, then that is a debt. All right, that's donation. So donation, people donate money to support a cause, project, or individual without expecting anything in return. Very good for what here, like medical bills. Then we have reward-based. Reward-based crowdfunding. This one is very, very popular, ladies and gentlemen. And reward-based crowdfunding, people will come and tell me, hey, Dr. Aura, you want now, like now, for sure, would want to take RCM internationally. And for us to take this RCM internationally, for us to take this RCM internationally, we may need funds. But you see, if, for example, I go and do a very good piece of proposal and put it, for example, under what we call 𝐁𝐥𝐸𝐤𝐤, or what we call Kickstarter. What we call Kickstarter is a very good platform. And then try like to beg, like this man here who is begging here with a ball. This is a very good example. I like this class. Yeah, let me download this so I can show it to everybody. This is very good. This is very good. But it'll take my time. I only have 8 minutes. I'm sorry. But you guys must be seeing somebody there with a big head like Mwalimu here with a ball, begging ball. So if we start begging like that, telling people that donate, people will not understand, because now they know that RCM is a big brand in the market. People know that. So then for purposes of just growth, then what I could do is to get to Kickstarter and do what we call reward-based. So reward-based, for example, I could give people, once we succeed, we tell once this thing succeeds, I'll give we call them backers. I'll give the backer shares. Or the backers, in this case, will have an opportunity of studying at RCM for free till they die. And their children the same. All right? We shall overcome. Now, ladies and gentlemen, that's called reward-based crowdfunding. So donors contribute money in exchange for non-financial rewards, often a product or service related to the project. Very, very important. So like now for this film, a company, you tell this people that if we do this film very, very well, successfully, then your people will be watching these films at a discounted price, something like equity-based. Now this is where we give people shares. Yeah, we give people shares. These are very good. This is just specific for shares, equity-based, capital in exchange for equity, like that. Then we have debt. Debt, of course, you give us your money, we establish RCM. Once we start getting back them, we start getting good returns, we give you back your money plus interest. That's self-explanatory, and you guys will be able to read this. Popular crowdfunding platforms, and these will be asked, like Kickstarter is reward-based, known for reward-based, Kickstarter. So you give us money, your children will be studying at RCM or any of our affiliates. They normally take about 5% of all the fees raised as their revenue. Then we have 𝐁𝐥𝐸𝐤𝐤. It's reward-based and equity-based. Yeah, so here you can get to enjoy our products. You can also get what here? Our shares. You can get our shares. Very good. They charge like 5%. Then we have GoFundMe is very, very popular. GoFundMe, ladies and gentlemen, is donation-based. GoFundMe, just help me. I go to India and get, in this case here, a treatment. I will not be able to promise anything in return. GoFundMe for personal, because of this word me, personal costs, medical expenses, charitable organizations, etc. But remember, even them, they normally charge a fee, but very, very small. You know, I've seen people making an argument, like this guy called 𝐫𝐞𝐯𝐢𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬𝐬 Yeah, he's a very popular guy, but he takes a percentage. He takes a percentage of the money contributed. Do you think it is justifiable for him to take some percentage of the money that is collected, like 5% of the total money collected for his personal use or helping? Yes. Because I mean, these guys, they are there like a whole month convincing people. Yeah, it's business. It's business. It's business. And I normally see people really attacking them on Facebook. Then I wonder, I mean, This Moriah guy has been there like a whole month shouting. He's using his resources, yes. For his logistics, I love that. I love that. So whenever you hear of a GoFundMe, always remember. Then we have the cubes. Cubes are the shares. Never forget these cubes. Yeah. So in this case, if you want crowd cube, then you're going to give shares. When you go to advertise on the crowd cube, you're going to give shares. You're going to give shares. I mean, there are so many. There are so many. We have the seeders from the word seed, equity based. Again, you're going to give shares. So don't go like myself. I will not want to sell my shares at RCM in the near future. So I will not want to go to like the seeders. No, I can't go to the cube concept. No, no. I would rather where I simply, so advantages, access to capital, be able to access capital. I love this market and visibility. Ladies and gentlemen, when you go to, and I would want you to try this, please. I would want you to try this, ladies and gentlemen. When you go, for example, to like GoFundMe, go and search these things. Try pitching. These are like the Shark Tanks. Try pitching there. So like go, the number one crowdfunding, whatever. You can see your course. Is it medical? What is it? Go for me an emergency. Do you even have like a sick animal? Yeah. Is it for education? The Wazungus. Oh, okay. 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 I can see you. Great. So are you able to hear me? I lost my internet a little bit, but are you able to hear me now? Am I audible enough? Am I audible enough? Yeah. So ladies and gentlemen, it has been a pleasure hosting you over this lunch hour. I would be repeating the same today at 6 p.m. At 6 p.m. and another repeat at 10 p.m. Don't miss these theory classes. Theory questions are saviors. I've seen students who pass by just knowing lots of what here, lots of theory. And once you attend this theory class that I have, fortunately, I'm very, very practical because I'm quite conversant with these financial management theories. I'm so sure you'll overcome in a very, very big way. Otherwise, thank you very much. See you later. Bye. Yeah, I will upload on LMS. Yes. Yes. All right. Great. Bye. Thank you very much. To buy a lunch. Yeah, you can reach out to me. I'll buy you something small. Reach out to me. I know you have my personal number. Thank you.